It is a scam when you don't allow everyone to operate on fair terms.
We are the Robin Hoods of sports betting. We take something back from the rich bookies and enable our customers to beat them instead.
Hi guys, Alex here. Welcome to episode 45 of the Trademate Sports Betting Podcast. Today I'm joined by a man who is an economist, F1 gambler, and also the author of many, many books that surround both of those topics and much more also. His name is Peter Sainsbury. Welcome to the podcast, mate.
Hi, Alex. Yeah, thanks for inviting me on.
Anytime, mate. Do you want to just start off with explaining a bit about yourself and your kind of day-to-day doings?
Yeah, so I mean, as you said, I'm an economist from 9 to 5, but kind of my background is in sort of commodity markets, so kind of both investing and trading commodities. But as you suggested as well, I've written a few books about commodities to kind of help individual investors kind of understand the markets better and kind of help them avoid the pitfalls that a lot of people fall into when they first get interested in that area. And then I've kind of perhaps we'll talk about it in a bit, but talking about I've written a book about betting on Formula One as well, and more recently about book about sort of narratives in the media and how they influence our behaviour and both will also affect financial markets, investing and betting as well.
Your first book that you wrote, did you have a deal or anything like that, or did you just go out on a line and start writing a book?
Yeah, I mean, like with all of them, I've self-published them. So I've got a blog that I write articles about what I observe in commodity markets in particular. And then I just kind of sort of thought, why don't I just write a book about this? Something that I can point to, something I could sell as well. And that book and all the other books have been kind of really well received, and I think have kind of helped people understand the markets in more detail. So that's been good.
I assume the process of writing a book and releasing it has gotten easier since you've done it a couple of times. It was the first one quite frightening.
Yeah, a little bit, because you're always learning sort of new techniques of how to structure it, how to get your message across. But then there's two kind of things. There's the sort of solitary activity of just getting down and writing a book, and then there's the other bit where you've got to be quite more extrovert in terms of kind of promoting it. There's two very different skills. So it's tough. It's painful writing a book.
I'd be more worried about if I wrote a book that no one would want to read it.
No, I think there's a book in. I think the saying goes, "There's a book in everyone." But
yeah, cool, mate. I really want to talk about because obviously this is a betting podcast and Trademate's all related with betting. I've talked about it very, very briefly on the podcast, and we've got I think one article on our blog about kind of the similarities or explaining the differences and similarities, between trading and betting. From your perspective, do you see both betting and trading as a similar investment?
Yeah, I think there's an assumption that perhaps betting is associated with gambling, so it's a kind of there's no skill involved with it. It's pure luck. But I don't think that is the case at all. I think there's if you're serious about your betting and your activity, then it's a very much you approach it in exactly the same way as you would as if it was you're trading a market or you're investing in a particular asset class. So they've both got very very similar attributes, and I think things like understanding value, understanding risk management. That's important in both activities, and really kind of being very clear and kind of ruthless about understanding the edge you've got in a particular market, and then kind of exploiting that on a systematic basis. So one of the things I always try and do is, and it's really difficult to do, but is to sort of focus on the process, rather than actually worrying about the individual outcomes. To think of it like a kind of an infinite game, so that you're refining your process, so that over time the outcome, the profit should take care of itself, and then gradually improving on that.
Yeah, okay. I should probably say from the outset too that my knowledge of the trading and stock world is very limited, so I apologise to anyone listening out to yourself if I make any big mistakes. So could you highlight probably the biggest similarities between the two then, betting and trading?
I think it's all about, I think it's volatility. So even though you might have understood a particular market, or in a case of trading, the impact that a particular event, for example, could have on a certain market, it's still just a bet. It's not 100% probability that is the actual outcome that's going to occur. So you have to consider it in those in that kind of thought process, so that you don't there's no such thing as a 100% cert. You have to kind of think of it in a historical context. What's happened before? What's the most likely outcome? But what are the risks that that the outcome could be different? So you're sizing your bets in the right way. You're potentially hedging those bets in a certain way, so that you reduce those risks, or you cover off different outcomes. And I think as I mentioned before, risk management is important across both trading and betting. You have to size those bets proportionally. You have to judge them over time, so that you're not going to blow up your portfolio after one day of trading or one day of betting.
Are there any more more common similarities than just those two?
I think it's being comfortable with volatility. So, in order to be able to, manage, but kind of managing your emotions over time. So, losses, weigh perhaps twice as heavily on you as winnings. So, you have to understand that impact that's going to have on you as a person, and kind of manage that going forward over time. And that's really very similar across both betting and trading.
Do you have a preference, mate, as to what you would rather be doing? Would you rather be betting, trading? Is it more down to the individual person in terms of their risk management kind of style? Yeah,
and I think that partly comes down to the kind of tools that you use. So with betting, it's typically fixed odds betting. So once you place that bet, you know exactly how much you're going to lose. The stake that you've placed. Trading and investing is potentially very different, and if you do use leverage, you're borrowing to increase the size of that bet, then the risks are potentially, if you're losing a lot more, are much higher. So you have to be with trading, especially, you have to be a lot more careful about the potential downside, if a bet moves in the wrong direction. And that's things like stop losses, and being potentially reducing the size of the stake per point movement in the market. So I think that's a key sort of difference. And I think I've personally got a preference for betting, in that when I go into a bet or a position, I'm very clear about what risk I've placed. And I think that comes down to, as well, and I think both angles are important, in that before you put a bet on or put a trade on, you need to be very clear about why you've done that, and what your exit strategy is if the market's moved against you, or if information means that bet or trade isn't as good as you thought it was. but it's being very clear about when do you get out of that position.
Would you say that one or the other is more risky than the other? Would you be leaning more towards, from what you were saying there, it sounds like you're more leaning towards trading being more of a riskier investment?
It is, I think, inherently, just because of the use of leverage, across the markets. You can get into positions where, say you've got a long-term idea that, say, the price of oil is going to go up, over the next couple of months, but that doesn't mean that in the next hour or so the price could fall quite sharply for for a completely different reason than you've imagined or as part of your long-term thesis. So that might push you completely out of your position, or you might have to take a loss just because the market's moved so much. So it's kind of balancing all those sort of short-term and long-term factors. Trading, I think, is certainly a lot more risky.
Yeah, so for me that's crazy, because I reckon if you polled the whole world, if you asked them what's more riskier, gambling or trading, I would guess it would probably be like 90% of people, I would think, would say gambling's more riskier.
Yeah, I agree. I agree with you. As what most people would say. I think once you've been in betting markets for a long period of time, you kind of understand that they both are driven by chance. Chance events do happen in the financial world as much as they do in sports. And it's just been very clear about that. And understanding what you're going to do to reduce that risk.
Yeah, I wasn't going to ask this till later, but I mean, kind of drawing close to that point now where I guess it's more about a stigma. Can you kind of talk about the stigma between betting and trading, and maybe if you have any insight into how it was created?
Yeah, I think I touched on it earlier in terms of perhaps betting is kind of associated with gambling as a kind of no thought goes into it. It's just about the thrill of the win or and there's so many more stories in the media about people that have become problem gamblers or and that shouldn't reduce the seriousness of those kind of issues, because they do happen. But then when the media portray a loss in for a trader, or it's promoted, I think, in the media as much more of a kind of a glamorous activity than betting. So I think that's wrong how the media portrays that. And I think increasingly we'll start to see betting kind of perceived as its own asset class in its own right. Potentially, you could argue it's almost completely unconnected from the rest of the financial world. And so I really think there's scope for that stigma to completely, maybe it'll still be there, but I think it shouldn't be there. And I think it will probably, as it reduces over time, I think it will bring a lot more kind of interesting people into the market. Perhaps people from a financial trading background that can bring kind of new skills, new ways of approaching different sports, and I think that'll be valuable for everyone.
Just as there is, you were saying, a problem gamblers or people with gambling addictions, is there problem investors, I guess?
Yeah, there is. I think it's interesting you ask that right now, because since lockdown started in many places around the world, companies like sort of Robinhood and other kind of online brokerages have kind of encouraged a lot of really sort of younger people to get involved with trading stocks, commodities, currencies, and often using really kind of complex instruments like options. And so I think you are starting to see a lot more stories about young people who've lost a lot of money, or some really sad stories about a particular guy in America who actually committed suicide because of he'd thought he'd lost almost like I think over $700,000. So it's I think it's those stories are coming out, and I think increasingly you will start to see more of those sort of stories as well.
Can you ever imagine I don't know, I guess it's something similar to I'm trying to think of like the most common advert you see when you see a problem gambler advert, when you the be aware, all those kind of things. Like, can you ever imagine, is there, or maybe there already is there any kind of equivalent like that for trading?
Yeah, I don't think there is at the moment. There'll always be something like past performance is no guarantee of future performance. You should get in with any investment that's advertised, but no, I don't think there is. And some companies are starting to advertise on for football teams, for example. So that's kind of promoting it to a much younger audience. But I think for a lot of younger people, they might not kind of associate those big risks with gambling. But yeah, I do think that some of the sort of similar kind of sort of safety messages that gambling companies are promoting, about being, sort of taking a break from betting or being very careful, need to be applied across other markets as well.
Very interesting. The great thing about betting is the quickness of both investment and feedback loops. Is that something that you find frustrating about trading?
Yeah, you're right. I mean, it's you either get feedback after a match, or in my case, like betting on a motor race. But with investing or trading, my personal sort of time horizon is sort of several months to several years, and that's kind of impossible to get feedback from the market in a way that over that sort of time period. So what I try and do to correct that is to kind of sort of write a lot about what I see. That kind of helps sort of refine my thinking in terms of discovering flaws in what I'm doing. Learning from history about how things have played out in the past and why that might happen now. But there's only history never repeats exactly. It's about spotting those patterns as they appear over time. And as you go on, you get that feedback from the market as to if a certain asset class isn't behaving as it was as it perhaps did in the past, and that's providing you with a signal. So it's those sort of little things that kind of add up, and then you start to think, this might be different. So maybe I need to be more careful.
Yeah, and what sort of benchmarks are you using to measure, like, whether your stock trading has an edge over the market, and like, if it's going to be profitable in the long run? Like, do you ever take a value betting approach to investing, I guess?
Yeah, absolutely. It's about kind of spotting those. The market I focus on mostly is commodities. So it's about understanding how they are valued against other asset prices. So whether that's stock market or different currencies, and how they behave relative to each other. And so it's looking at those factors, and also if you think about things like agricultural markets, so things like corn or wheat, they tend to behave to a sort of seasonal pattern, depending on the weather, and you can look at how they behave or how they're priced relative to how they were, say, over the last 5 years. How they're priced relative to different stock levels. The amount of inventory that different people around the market are holding. So yeah, and it's a very sort of similar process as to how you do it through betting as well.
Yeah. Do you think that individual investors stand a chance to outperform the S&P 500 these days, when there exists like hedge funds that employ hundreds of analysts and supercomputers?
Yeah, I think the answer is perhaps yes in the very short term. You could have put all your money in Tesla a few months ago, and you would have outperformed the S&P. But I'm interested in kind of outperforming or doing well over the long term. And so I think for that, if you're an investor in the market, I think it's about kind of lengthening your time horizon. So all those computers that you mentioned are all focused on spotting opportunities. This second, this minute, over the next few days. But what they're not focused on is that the next several months or years even, and even most sort of professional investors that are looking for longer term opportunities that might be employed by a bank or other kind of investment house. They've got career risk to contend with. They can't take unpopular positions because they're always judged against their colleagues, their industry standard. But that gives us as individual private investors, an opportunity to leverage that sort of time arbitrage, as it were. So I think that's probably the only way you can really outperform an industry benchmark.
Yeah. And then my last question on sort of like the trading versus betting debate. Would you say that there are more? I want to ask more question around efficiency, because we talked to this a little bit about with a guest Nenko from the Church of Betting about 10 episodes ago, and he was kind of saying, we were talking about the efficiency of betting markets, and he was saying that when you compare it to the stock market, it's basically a joke, like in terms of liquidity. So would you say there's more? There's two ways you can look at it. One, you can probably maybe find more value or arbitrage opportunities, I guess, in betting, maybe just because of its lower efficiency levels, and you can spot those, points where they've just got it completely wrong. But then also on the other hand, maybe when you've got a smaller edge, it might not even be value because of the efficiency. Can you, I guess, kind of speak to that a little bit?
Yeah, I think that's correct. Yeah, there's more. Betting markets are typically less efficient at incorporating information than financial markets. Yeah, and so there's potential for capturing value, but the problems are you can't always get the bet on in the size that you want when those opportunities do arise. Either because a bookmaker might. That might be the limit they have, or they might have restricted you, to such an extent that it's impossible to do that. So I think it's really about, you have to be quite patient, I think, and you do all this research, you do all this analysis to try and understand where there's an edge, where there's value, and it's very tempting to kind of jump on that, get impatient, think, I'm just going to go for that opportunity. But sometimes you have to be a bit more patient and kind of wait until you can get the bet on, in the size that matters and actually has a worthwhile payoff for the work that you've put into the market. And that being said, I think that in financial markets, some markets are more efficient than others. And just thinking about the areas I'm interested in, if you compared the oil market versus an agricultural market, there's a lot more opportunities in agriculture than there is in oil and gas, I'd say. It's about being patient and trying to spot those opportunities when they arise, and when they do arise, and you can get a big well-sized bet on. It's being being confident about that, and letting it run.
Do you ever get frightened when you see all the efficiency levels and of the the trading markets, the stock markets, but then you come down into a betting market, maybe more not really talking about like an English Premier League market, which is pretty efficient, but maybe some lower leagues. Do you ever I guess maybe knowing how much liquidity goes into those stock markets, are you ever frightened to even go near something that has not even close to the amount of liquidity there?
I think I think it depends. So I think you have to be careful it's about risk management as well. So if you're and how close you are to the end of that event, when there could be a payoff or a loss, in the financial markets, or if you're going to use a company like Betfair, there could be lots of liquidity, and you've always got the option to lay off your bet. You might take a small loss, or you've got out of your position. But in as you said, some kind of small esoteric betting market where there's low liquidity, the value might be there, but it's about sizing that bet correctly. So just in case the information changes and you can't get out of that position, then you haven't blown up your portfolio.
Yeah. Mate, before we get into the F1 betting kind of stuff, I wanted to ask about your book you wrote. You mentioned earlier, Pay Attention, about narratives in the media. And I'm wondering if you've ever seen a similar thing in sports where, I was just talking to Dan Weston about this, who we had on the podcast last week. And he was kind of saying the narratives that commentators create and how that actually creates some pretty good betting opportunities, because people follow what the commentators are saying. And you can kind of get on the opposite. What kind have you seen? Do you think that's a common thing in sports betting? I know you're more so involved in F1 betting. Is that something that you see? Like maybe even just not even during a race or a game, you might see a narrative that's been created around a team or a player, driver, but the stats don't show that.
Yeah, absolutely. You kind of every in the case of Formula One or other sports, you're always judged on your most recent game or most recent race. Commentators are very quick to write you off if you've made a mistake, or your performance isn't up to your teammate, or how it would normally be. And I think in both sports and markets, the headline, the front page of the magazine or the website is kind of like the strong narrative about how what everyone's talking about, with the real message that journalists are trying to get across. And so in Formula One at the moment, it's things like Ferrari doing really poorly, Sebastian Vettel being massively outperformed by his teammate, Alexander Albon, the risk of him getting replaced again. But if you look at the stats, sometimes those, as you say, that commentators or journalists write-up doesn't always reflect the reality. But I think that can throw up valuable opportunities, because that narrative, that assumption can feed into how the bookmakers price up events, and it doesn't always mean that that performance is going to be mean revert. It doesn't necessarily mean that just because narrative around a particular driver or a team is really poor that they're suddenly going to outperform. But there's something to watch out for, because I think it does have a big influence on how both markets and betting markets are priced up, and you can use that to your advantage. Yeah.
All right, let's talk about your F1 betting, mate. Can you just, I guess, briefly describe, maybe in a as quickly as you can, what your book's about, and how you're finding value in these markets and kind of maybe the most common edges you find in F1.
Yeah. I mean, it's Formula One's a sport I've been following since I was probably about 5 years old. So it's something I've followed, and I'd always be watching every race. Anyway, even if I wasn't betting on it. But I've been betting on it for about sort of over 20 years now. And then probably about I think it's a couple of years ago, I thought, why don't I write a book about it in the same way that I had for about commodity and financial markets. And so the book kind of follows a similar process to what I've done on commodities, and it kind of introduces the sport and highlights some of the things you need to be aware of, but also some of the sort of key things to watch out for and key opportunities. And the ones I try and focus on are kind of what we talked about earlier on. Those sometimes illiquid markets away from the public eye. They're less efficient. There's that risk, of course, that I can't get out of that market, or I can't hedge that risk. So it's things like sort of match betting, so betting one driver against his teammate, or group betting. So that could be instead of betting on who's going to win the race or who's going to be on the podium, it could be a group of 4 or 5 drivers towards the back of the field, and then betting on which one of those is going to win the race. So it's like markets as it is with betting. All the attention from bookmakers and individual bettors tends to be on the front of the field. Who's going to win the race, and a lot of the time those can be quite efficient markets. So that's why sometimes it's best to kind of look further down the field. You can leverage the research you do on those particular drivers, how they perform against each other, and take those opportunities when they arise.
That's quite interesting, because it's almost like a niche within a niche, isn't it?
Exactly, yeah.
I mean, I've talked to so many people in the betting industry that have just said the importance of, if you're just starting betting, which kind of goes against everything that everyone does. If you just start betting, you normally bet on the most popular league around, whereas from the people I've talked to, the advice is to bet on something very niche, maybe something you've watched a lot of, that no one really watches. And I guess Formula One, if you're just betting Formula One, that's a niche within itself, I guess. But then to dive deeper into certain markets, that's even more niche. Is there something like, you mentioned the match betting, the group betting too? Is there a common edge, I guess, in those markets, or maybe it's something that a narrative that's gone on this season that you keep seeing on and on without giving up too much? Losing your own edge.
I think a story about particular teams, how they perform, against each other's teammate. So sometimes that, some drivers can be unfairly rated against their teammates. Some drivers, for example, have a habit, or that's what it seems like sometimes, is a habit of getting involved with accidents, and that that happens occasionally, but that can unfairly judge them against their teammates. So they can might overperform most of the time, but there are occasions when they underperform, and that's what grabs people's attention. But it's not properly reflected in the odds. So it's things like that, really. So sometimes it can be very sort of subtle differences, and just being aware of how that plays out.
So you're mostly just betting before the race, or also during?
Yeah, I'd say it's perhaps 90%, 95% before the race. I used to do a lot more, kind of in play betting on Formula One. The thing about Formula One is that, perhaps unlike other sports, the rules change over time. They can change season by season. They can change even between races, depending on the sort of technical regulations. And going back quite a few years now, there used to be refueling during the race. And if you could estimate the amount of fuel that was put into each car, you could place trades. You'd know when they would come in for a pit stop to refuel, and that was something I did. Going back quite a few years now, is understand when those drivers were going to go into the pits, and you could place some trades on Betfair to kind of sculpt that small movement in the market. So it's just things like that. But now I'd say it's much harder to trade them in play, just because of the way the regulations have changed. It's all a lot more about the tyres and how they degrade, and that's something that's quite difficult to predict and kind of manage within betting on it in play.
And so you're pre-race betting on matching up drivers in the same team, and also the group betting towards the end of the not the podium. What's the word? The grid is the word I'm looking for.
Yeah.
Have you built your own ratings model to, I guess, pump out those predictions? And if so, what are the most challenging aspects of modelling for F1?
Yeah. So things like driver performance, so how they perform relative to their teammate. That's their benchmark that they always try and beat. Things like reliability. So perhaps unlike other sports, a driver could be by far the best driver. The car could be a better car, but if it isn't reliable, it can't get to the end of the race. Then you're never going to win a betting on that driver to win the race. So it's understanding those kind of risks. Things like team performance. So it's not just about the driver. It's things like how well do they perform in pit stops? Where they're trying to undercut other drivers during pit stops. How well do they think about strategy during the race? And then it's things like track conditions and the weather. So different circuits that they race on. Perhaps some are more likely to get safety cars, some are more likely to have accidents, some circuits are more likely to get high number of retirements, and then it's putting all of those factors together, looking ahead to where the next race is, looking at what the weather conditions are going to be, how recent performances played out, and then spitting out what's likely to happen, and then comparing it against what the market's telling you.
And then you touched on this earlier about how betting into such a niche market, your strategy is more so to bet into a niche market where the efficiency levels aren't as big or as great. Is that something you're concerned? Like, would you be concerned about closing lines then? If you don't think the market's all that efficient, are you judging your maybe post-performance or post-bet, are you looking at closing lines then?
Yeah, I don't, unless it's betting on, as you say, one of those markets, like who's going to win the race. It's not something I really pay too much attention to because, sometimes those markets I described earlier don't always move very much at all pre-race. Sometimes there's very little movement in them at all. Judging what the closing line would be on those markets isn't always a great benchmark to understand how well I'm doing. So I think, instead it's more about, we talked about it earlier about the sort of chance involved with the races and how they play out. So what I tend to do is write down bets I've put down, the reasoning for that, where I see the value and what I estimate the actual odds to be. And then after a race, I'd review all the action, review all the commentary as to why things played out, and then compare the before and after, and then spot first of all where I might have gone wrong, but also where should I have perhaps been more aggressive, and then kind of really the end, what lessons can I learn to bring into next race or next season. So that's kind of sort of process I use to hopefully improve my process over time.
And for the bigger F1 markets, I would assume off the top of my head, the winner of the race would probably have the most liquidity. What closing line would you go by if you were betting into the F1 market like that?
Yeah, I wouldn't say there's a particular kind of bookmaker that I would use. Like many people, I'd use something like odds checker to just compare relative prices across different bookmakers, and in a way that's quite a good way of just understanding what the closing line is, and where markets have moved when they opened to where when they closed.
Yeah, okay, makes sense. It's quite a global event, isn't it? Too.
Exactly. That's right.
Yeah, exactly. All right, cool, mate. That was lots of fun. I enjoyed talking about F1 betting and also trading versus the betting markets, I guess. Mate, where can people find you and the work you're doing at the moment?
Yeah, I think the best way for people to get to follow me is probably on Twitter, and that's at Bet on Formula One. Or the other Twitter account I've got is at Peter Sainsbury 7. So the first one more about Formula One, the second one more about commodity markets.
Cool, mate. I'll make sure we put those links in the description for you for anyone listening. But it's great having you on, guys. And in terms of podcasts coming next, will be a preview coming up later this week. I'm not too sure what is on in terms of the betting world, but it will be something like that with George and Haru. But thanks for listening, everyone. Make sure you do a quick rate and review of the podcast and subscribe to us wherever you listen to your podcast. And if you're looking to implement some of the strategies we talked about today, especially the value betting ones, please start a free week trial of the Trademate Sports software. But thanks again for coming on, Pete.
Thank you very much.
Catch you later. See you guys.